Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, November 20th at about 1:30 p.m. Eastern. Well, before we dive into the market, please know that all of us at ToniTurner.com wish all of you and your loved ones a healthy and enjoyable Thanksgiving. And now on to the market. Wall Street's main indexes are dipping today as fears grow over fading stimulus and the blow to the economy from increasing coronavirus infections. And on that note, let's move on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Now, when I captured this chart today, again about 1:30 p.m. Eastern, the SPY was trading at $356.70, or about $35.67 on the S&P 500 itself. You can see it right up here. Fortunately, it's still trading above the green line, the 50-day simple moving average. Now we can look back here just actually this week and see that actually it was Monday, November the 11th, the SPY made a new all-time closing high at $362.78. Now it has dropped just ever so slightly since then, again now trading at $356.70. Now, it did gap up here on November 9th to an all-time intraday high at 364, but as you can see, it gapped up here, then fell to close lower, so we don't really count that. Yes, it was a high, but nobody stayed there. Everybody sold, so it came right back down into this trading level here. So our November 11th high right here does reign supreme. Now, we can see here that the SPY has been basically consolidating with very narrow range days for the last 2 weeks, obviously waiting to see if the government's going to offer some stimulus or not. So we've had narrow range trading days. We do still have nearby support down here at 320. So we have this line of potential support. Up here we have this support, nearby support at 347, 348. Of course, we've got the 50-day moving average coming in at almost 342. We have the 20-day moving average coming in at 347. So lots of potential support here should the SPY move lower. And of course, we always have the 200-day moving average down here, now trading at $314. So, what can I say from here? But you know the drill. If the SPY can climb higher here, if it can head up and move up over that prior high, moved up to 363 and break out from here, fantastic. And we can say the market likes to go up before a holiday, and of course next Thursday is Thanksgiving, but we certainly can't guarantee that. So price can either climb back up here in the not so distant future, or if it can't manage to do that, then we have to again mine these support levels here at 320 and again at 314. So please just keep an eye on your protective stops and trade wisely. Our next chart is a daily chart of the Invesco QQQ, symbol QQQ. We call this, many times we refer to the Qs as the cubes, but anyway, you know what I mean. This is a major ETF that follows our index, the NASDAQ 100 index, very important index in the market. Top holdings are all the big momentum stocks, big growth stocks, obviously including Apple, Amazon, Alphabet, and Facebook, and so forth. Now, when I captured this chart today, the QQQ was trading at $292.17. It touched a new all-time closing high, as you know, back here on September 2nd at $302.76. But unlike the SPY, which has come back up to, in the last week, to that prior high and above it, the QQQ has not made a new all-time closing high since that September 2nd high. So it did slide down here in September lows down to 260, then rallied back up in October to about 298 right here, making a lower high here. Then moved back down to about 269, 270. So that was a higher low. That's a good thing. So what all that means, and you can see it here, is the Qs are now forming a triangle. We talked about it last week, and I said that it's kind of better, especially if it's going to break out, if a triangle sees a breakout, hopefully not a breakdown, before it's 2/3, or by the time it's 2/3 and no more than that into the triangular move. Why do we say that? Because sometimes you can see price just flat get tired, and what that means is that traders, although I can't see disinterest coming along here, I can see lower volume in here for the past 2 weeks than we had in the prior 2 weeks. So if you look down at the volume specs down here, you can see that volume in the last couple of weeks especially has lowered. It's tapered off. So what we need to do here is certainly not sell all of our tech stocks, but certainly watch here, know where the support levels are. Of course, we have one down here where the 50-day moving average is at 281.60, and that's, of course, potential. Another one where the trend line comes in at 270. So let's keep an eye on this. Of course, we have the 200-day down here at 246.93. We can call it 297 if you want. So the Qs obviously could break out of this triangle and move back up here to the 260, the 298 range, or it could, of course, take a leg down here, depending on what happens. I'm going to say in the next few weeks. Next week will be a shortened week because of the holiday. So now let's go on to our final chart today. We're looking at a daily chart of the Global Artificial Intelligence and Technology ETF, the AIQ. I don't believe we've looked at this before. The AIQ has 85 holdings, including some of the top holdings are Qualcomm, Salesforce.com, NVIDIA, Samsung, and Facebook. Now, when I captured this chart today, the AIQ was trading at $25.44. Now, it made a new all-time closing high on November 6th right here at $25.52. Now, look left with me, since it sunk to the March lows down here at about $12.75, it then rallied very nicely, and actually for a long time through to August, it walked up pretty much here, walked up its 20-day moving average, impressive. Then it backed down here in September and moved down below its 50-day down to close to 22, but then rallied back up only underneath that 50-day for a couple of days, and rallied higher, made a new high, fell back down again, made a higher low. We always want to see a higher low, and that's because it tells you that buyers are willing to buy it and start price up again before it reached that prior low. So if price retests the prior low, okay, but you don't want it to go below it if you're long. In the case of making a higher low, that's a good signal. It means buyers come in and buy it before it reached that prior low down here around 22. So then it gapped back up here, had a couple of crazy days along with the rest of the market. Now it's edging up ever so slowly but nicely, and again today trading at $25.44. Now, if the AIQ can remain positive into the coming week and remain above the 50-day moving average, which is coming in here at 24.08, I may well add a position of it to my portfolio. I'm going to place my initial stop fairly tight down here at 23.80 below the 50-day moving average. And when and if the IAQ breaks above 26, I will potentially add more shares to my portfolio. And of course, by then, I will have a trailing stop in. So you may want to keep an eye on the AIQ during the coming week. And now, on to final thoughts. But before we do, Please know that if you'd like to become a more successful trader, this is the perfect time to check out my my trader training programs. You will love my simple yet powerful strategies devoted to swing trading, trend trading, bottom fishing, and much, much more, because they can help you increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen or simply click on the orange button below. And now on to final thoughts. Our question this week is, do I tend to sell my winners early and let my losers run? Do you ever do that? Do you ever sell your winners early and let my losers run? So when the market looks toppy, and right now maybe it is a little toppy, you may want to check out your positions. Do you have any positions with a 10 to 20% profit? And if so, if you're a short-term trader, you may want to consider taking partial or all profits. You could check your positions to see if they're overbought, meaning the RSI is over 70, and maybe you want to take some. You also right now want to check out positions that represent high momentum stocks or growth stocks, because they tend to sell off harder if we do encounter a down market here. Now, as you think about what I just said, keep in mind that most traders will sell their winners and keep their losers. Okay, let's reverse that today. Consider establishing a ratio of win-lose percentages like this. Short-term traders can decide that when their trades lose 2%, and that's 2% of the purchase price when it's purchased, 2%, they exit. When they earn, however, 5 to 6%, they take partial or all profits. So you see that? Smaller loss, bigger gain, kind of baked in. Or you can take all profits, or you can raise your stop and let that winner run. That's fine too, but have a plan. Long-term traders may exit with a 5 to 6% loss and take partial or all profits, and or raise your stop when profits run up to a 10-20% gain. The important thing is that your winners earn more than your losers lose. Your winners earn more than your losers lose. That's how you stay a consistently winning trader. To help you get more winners, also think of this. You can conduct a market overview before you enter any trade and establish a bias, be it bullish or bearish, so you kind of get a feel of which way the broader market is going. Also, you can develop a plan for each trade before you enter. To me, that's an absolute. You've got to have a plan. And also, when you enter the trade, do this. Set a hard stop with your broker and perhaps even a profit target as well. Now, what you can do here for that, you can use an OCO, order, and that means order cancels order. You can set that with your broker. And that means you can enter with this OCO, you can enter both a stop, a protective stop price, and you can enter a potential profit target. So if one is filled, the other one will be automatically canceled. Get it? So you kind of got all of these percentages in place that we just talked about, and that can help raise your rate of winners. So try all that out. Think about what I've said. See if it agrees with you. I think it will help you become a more successful trader. And if you want to become truly a consistently winning trader, check out our easy-to-learn yet powerful online trading programs that, again, will help you increase your trading profits from now on. From swing trading to bottom fishing, trend trading, and more, just click on the button below for more information. Until next week, happy Thanksgiving. Keep green on your screen. I'm Toni Turner, and this is The Market Now.